Good afternoon, everybody. It's Greg. And the last couple of days, talking about the Dow coming down. Yesterday, actually, coined it as a mini crash. Just coming down as hard as it has day after day, down at support. And we talked about this beginning to show relative strength compared to the others that might, I said at the time, might play some catch up. And that's what's going on here today. So as the other markets are going down, you see the Dow has been chopping sideways here, and it made a couple of attempts to go up. You see the topping tails that formed each time it went up, and then came back again and was basing here, looked like it was going to go up. And so as the S&Ps have approached, and they're slightly below 5,200, the Dow came down. So buyers threw in the towel. They gave it up. And now it's holding at this pivot. So we always look to the left for the pivots. And when we see the pivot, our thought is, right, all of our concepts come together to produce what I call a thought process. So when there's a pivot there, we know that there was support, and we make an assumption that they will show up again. It doesn't mean it's a trade. It just means recognize that there was support there. Let's see what happens. So with the S&Ps coming down to 5,200, they're slightly below. I'm going to take a look at that. I'm also waiting to see if we get an NYSE tick extreme. It hasn't happened yet. That often marks a low. Hasn't happened yet. Maybe this would flip back up again, and I know a few of us in the green room would consider taking this as a trade if it did flip all the way back up. Since it showed relative strength, maybe this turns into a green day. Maybe not. We're waiting to see. So let's take a look at the S&Ps. As you can see, they're down below 5,200. Now, 5,200, why that number? Well, it's a whole number. In addition, let's see if I can show you this here. If we look at the puts expiring today, I didn't want to do that. I'm trying to flip here. Hold on. It's not expiring today, so we got to go to zero. 5,200 has a high open interest, and it's got high volume. So that tends to be a point where there'd be a stall, possibly a turnaround. It doesn't have to stop exactly there. It's just to recognize that this is an important level today, and maybe it turns around there. Also recognizing the 50 MA is down below, which is lined up with, this little shelf of support right there, which is 51.97 and change. We call it 51.80. And the way this is going down, it may be headed there. One of the reasons to think that is, see the way that this 5 minute is going down? And it tried to hold here, it's going down, try to hold going down. Now it's starting to accelerate vertically, but these bars, notice how they were about equal in range, and now we're starting to get an expansion. Often at the end of a move, the bar begins to expand, and so we get a wide range bar ending. So it's good to see this is beginning to expand. The 50 MA is right there. That may be where it's headed. We'll have to see. Buyers may show up before it gets there. I'm just looking over there. The bottom of that bar is below the 50 MA. So you can set an alert on the 50 MA, give or take, if you're watching it. We'll see. That's one of the things I'm watching. Qs are heading down, and they're playing what we call catch-up. Yesterday in pre-market, I mentioned Microsoft starting to break down. I'm going to come back to the Qs here. But this was gapping below here. And I said, okay, here is a kink in the armor of the tech stocks. That breaking down, and this continues to go lower. And XLK, I'll show you that in a minute. Qs are now coming down. I just want to remind everybody that these market internal gauges that we monitor, they are accurate. I've been using them for years, and I always say, don't count on the turn happening the day we give the signal. It rarely happens. And so that happened around here. Well, pre-market, I'll go take a look again. But anyway, it happened around here, I believe, that we got the signal. And we got this reversal day, and they held up. It took a few days for things to begin to roll over, and now they have. Now, you can see things are beginning to stabilize here as they began to accelerate. That bar isn't done yet, but maybe it doesn't keep going down. With the S&P getting to the 50 MA, we'll see. I don't know yet. It's early, but I think eventually this will get down to the 50 MA, probably next week. Who knows? Maybe it keeps going today. We'll just have to see. We're just right now monitoring this to see if it forms a pivot. Does it begin to go sideways? Maybe have an intraday counter trend rally to some degree. But eventually, I think this gets down to the 50s. It just tends to be a target. SMHs gave it up. Some of them in quite the nasty way. It's a little bit surprising. I say some of them. Look at breaking because that was the strongest. That one breaking. Texas Instruments was strong and breaking. And you can see what's going on here as I'm flipping through it. Look at this one, not microchip. Marvell, NVIDIA even starting to pull back. Watch the gap. That one hasn't broken yet. That one, ADI hasn't broken. Marvell, wow. If there was news, anyway, maybe there was earnings. It was looking like it was going higher. Obviously, it's not anymore. LRCX broke down. So you can see what's happening here. The strong are falling apart. And what's bad about that? Well, it's bad is obviously what's bad about that. Things start to fall apart. AMD is holding up relatively well. But the strongest sector, right, go back to SMH, the strongest sector starts giving it up, and it may have to give it up some more. But when the strongest sector starts to give it up, and the weaker begins to take hold, we could be closer to the end of a correction. Though historically that does work out that way. So we'll be watching to see if that occurs. So again, these are the thoughts that we go through, what we're looking for, how we make assessments. And of course, if you watch the pre-market this morning, sentiment is not near an extreme. I'm just turning my head here to see where put call ratio is not at a high level right now. Like we'd want to see it down at 1.3 or greater, and that's not happening at the moment. But you see tech breaking down. That's on the 50 MA. Maybe beginning to hold a little bit. Consumer discretionary coming back down again. Amazon gave it up. Tesla, we've been watching this for a turn, and it's given up today, but it's holding up relatively well. So some of these charts that we're looking at, and we see, all of these nasty breakdowns, Tesla is holding this base. And if we were to possibly get maybe Monday, if this could be a bottoming tail bar at the end of the day, or Monday that this is a red bar ignored, we get a green bar, we're going to be looking to get this going back up. And we looked at spiders, communications. So lots of red, materials starting to roll over here. We're getting a continuation pattern on the industrials. It's on support. Consumer staples, money's starting to flow back into the defensive stocks. And let's see, Costco gave it up today, but what is strong? Give me a second and I'll tell you. And look, here's the idea. The weak ones begin to show relative strength. Money starts rotating into what's pounded down. Assumption it's not going to go down as much, or it lifts up. Dollar General turning around, Schmuckers. You see, this is all the beat up stuff that is now beginning to hold. Campbell Soup, defensive stuff. The thinking is with consumer staples, things that you need, so you're going to spend money on that versus consumer discretionary you don't need, that gets sold in times of weakness. So there you have it. We'll see how things shape up here the rest of the afternoon. As always, if you have any questions, email Dan and I, Dan and Greg at Master Trader.